Hello friends, this is Raj Sastry from Raj Option Trading. Today is May 20th, 2023. Hope you're all doing well. In today's segment, we'll take a look at how to trade SPX options and make your millions. So with that, let's jump in and get started with a quick market update. Look, from a market update perspective, we got S&P 500 going very well, as you can see here. Nice uptick here. Look, nice strength in the S&P 500, all higher highs and lower highs. And look, Nasdaq is going gangbusters. Look at the performance. It's even going above the Bollinger upper band. Great strength in Nasdaq, led by big tech names like Microsoft, Google, Nvidia, and so on and so forth. And we got Dow Jones Industrial Average slightly weaker, as you can see here. It's touching its Bollinger mid band, as you can see here, slightly struggling, as you can see. And then you got Russell 2000. Russell also made a nice comeback, as you can see here. But look, it's a high implied volatility, high IV rank comparatively. And this is a good one to trade off late because it's jumping up and down nicely. And from a volume perspective and open interest perspective, your options trader, your favorite choice should be SPX because of the nice open interest and volume. And the next one is Russell 2000 or RUT, as you can see here, mainly because open interest is relatively high and also volatility is high. Other two, DJX and NASDAQ here, they are not great in terms of liquidity, because open interest is not super high. We can look at this in a minute. So with that, let's jump in and look at the fear and greed index. Look, from a fear and greed index perspective, we are in the greed mode right now. So that's why Nasdaq is going very high, as you can see here, and S&P 500 is also going well. And next week, I could see us going back to neutral, mainly because look, there's a debt ceiling crisis going on here, and Republicans are walking out. So this drama will continue through next week, probably for next 2 weeks. That's why I can see us coming back to neutral. Expect a lot of volatility. That's when you can make a lot of money trading these SPX options. So with that, let's jump into this platform here, Thinkorswim. What I will do is I will go into a chart here and bring up just SPX. Let's go into a 1 day chart here. Let's go right here and I'll bring up just SPX. Before I go to SPX, look, from a volatility perspective, I got VIX here. Volatility is literally low, as you can see here. That's why at this time, because volatility is low, I don't recommend trading the volatility strategies at this time, like selling premium. What I would do is really look for triple digit down days, like when you see a news Dow Jones Industrial Average down say 200 points, 300 points. That's when you sell premium and make money. But if it's going higher and VIX is super low, like we see here, there is no point selling premiums. For options traders, biggest virtue is to wait patiently and look for those big down days and sell premium. So if you want to sell, if you want to make some money during these up days, there are different strategies. I will talk about those also as we go forward. So with that, you can see here we got, let's go to SPX right now. So from a SPX perspective, as you can see here, it's pretty much trading in the nice sidelines, as you can see here. I got an upper channel here and a lower channel. It's been going at least within these two channels here, 40, 4200 and down around 3800. Nice channel forming here. That's why when it's going here, going nicely higher, you can sell some call premium or a call spread at the top here and make some money. And when it comes down here, sell some put spread here and make some money. That's the greatest way to trade these things here. um, Wait for those down days because when the market comes down, especially you see some news saying Dow Jones down 300 points, that's when you sell these premiums, because the implied volatility is super high at the time, and you'll get some more premium. So that's the way to do it. And look, from an RSI perspective, relative strength index is pretty much 60 high for me. So you got to wait slightly. And look, the implied volatility itself is low. Look at that blue line here, it's trending lower, and historic volatility is high. And IV rank, as you can see here, is super low here, 6.4. I would not sell premium here, but in the uh, SPX, you can still make some money selling premiums way super low. I do it sometimes, but my favorite way is to ratchet it up when the Dow Jones falls. When you see market falling, that's when you go and sell more. But if the market is checking along, there are other ways to make money. And look, from a MACD perspective, the blue line is trying to go higher. You can still see some strength here, but wait for a market next week. With all these debt ceiling issues going on, I could see market falling next week. I'm putting some money to work next week with this market falling. All right, so you might wonder how to make money. And before we go into the details here, I want to just quickly compare and take you to option chain here. Look, from an option chain perspective, typically I don't like to trade too much in these weekly, because typically the volume and the open interest is relatively low. That's why you see, I have positions in the, typically I have positions in the monthly, as you can see here, and I do weekly. As you see here, I do some weekly. I follow a little bit different strategies for weekly, and I have monthlies all along. As you can see, I got monthly here. This is 10-day out, as you can see here. I'll be taking some profit soon, and we got here 26-day out, 41-day out, and sometimes I even go to 61-day out. I'll be starting opening the positions in July 21. Pretty much I'm waiting for market to come down next week, and I'm going to open up some positions in 21st July 23 and bring some premium there too. All right, so with that, look, we'll go into SPX here. I will take you to this 26 days out, and I will show you what's going on here. Or let's go to 41 days out. Look at the open interest here. Look at the nice and high open interest. That's why I love SPX here. Nice and high open interest. And for the put options here on the put side here, look, this side all the way here, this is the put options. And on the put option side, as you go into delta, you keep watching the delta here. This is the delta column, as you can see here. As you go down around delta 15, 16 here, right here, look at the volume, very nice open interest. As you can look here, nice open interest. That's what I love about the SPX here. No issue around liquidity, nice liquidity. One thing, most of you might have noticed it. I love when I see these huge open interest numbers. Look here, we got a, around say 11 here. Look at the open interest here. Nice open interest, 10,080. Nice open interest. And look, we got one more here, 3885. Look at that open interest, 40K. Nice and high open interest. And look, one more here, 3900. Look at the open interest, 26K. So these are, we call it option walls. Option wall, it's like a big wall. There is a lot of open interest, and market makers will look at these levels here. Whenever you see a huge level like this here, like 40K in SPX, for 30th of June, 41 days out, that tells you market maker want to make sure, they will hold the line here at 40K. They will make sure the price will not fall below 3885. So that's why, if you want to sell them put options, your short leg can be this one here. I wanted to be a little more conservative. That's why I sold this spread here. I sold 3880 and 3860, the $20 wide spread here. But typically you could do, you'll get a better pricing if you sell 3885, and you could go into 3860. If you sell this spread, you get an easy fill, mainly because look, there's a nice open interest here and nice volume. So that's how I would do it here. If you want to sell a put spread here, you could go in here and 3885 and sell. And let's go here and look, vertical spread. And look, we are selling at 3885. That's our short strike, as you can see here, delta 13 in this scenario. And you're buying back, look, there's a nice open interest here. You're buying back 3860. They can go all the way here, 3860. There you go. It's a, as you can see here, 3860, we are buying back 3885. You are getting $1.80, as you can see here, mainly because volatility is low right now. And you could go into analyze trade here. So as you go to the analyze trade here, I will remove this one here. Look, we got nice looking chart here. And to analyze this trade, I would go here and set slices to break even and 7-1 expiration. And I'll go over here and put the expiration as 7-1. Let's see here. This is 7-1. All right, so July 1. So there you go, July 1. So look, this trade has got a 91% chance of succeeding here. That's why I love this vertical spreads. Nice chance of success. And if we go back here and confirm and send, look, your buying power effect is 2320. That's why right now volatility is low. That's why I will not be selling this right now. When the market comes down, this is a great one to do. And right now I will not be selling this, but it's a great strategy. You could look at this huge open interest here. It's a good way to really have your short strike at the huge open interest. So what we could also do is keep watching down here, keep watching next high open interest. Look, we got delta 13, a nice open interest. Typically if you go lower delta like delta 13, you'll not make too much money selling premium. You can go all the way down here. Look, we got 4,000 is a healthy level, as you can see here. At 4,000, you could have 4,000 as your short strike here, 20 delta, which is pretty good here. And as you look here, we got here also we got nice open interest here, 3975. This is a $25 wide spread here. You could say 4,000. You could sell this strike here, or this spread here. Basically, your short strike is 4,000, as you can see here. And for the buying back here, 3950. 3950, nice open interest here. Let's see, 3975. This is also okay. You could go here, 3975, 25 wide dollar wide spread here, 3975. There you go. So look, this is a better one. As you come down, now we are going into a little bit higher delta territory. That's why you get a nice credit here, as you can see. And you could take this to our analyze trade tab here. And look, let's go back here and unclick this. And 7-1, that's great. Look, there is again 91% chance of breaking even here. That's good enough for me. I would be looking to sell these type of strategy here when the market drops big time. Look, nice nice premium that you're getting here. And if I confirm and send for a while here, look, I'm getting max profit is 3,000. Max loss is 2200. Buying power effect is 2200, which is good enough for me. I'll be looking at this type of trade as the market drops next week, mainly because of the debt ceiling worries. And if I take you to different one here, let's go start from DJX here, Dow Jones. Look, the reason I don't trade Dow Jones too much is look, we can go into say this is 61 days out. That's fine. Let's look here. Look at the open interest here. There is nothing. It's nowhere comparable to open interest in SPX. That's why I don't trade DJX at all. And if you go into 26 days out here and look around, say, um, delta around, say, 20 or so, there is some, but not too much. No way comparable. And you can't make too much money when the open interest is so low here. So that's the reason I don't go into DJX here. And if you go to QQQ here, QQQ actually, let's go to NDX, which is similar to QQQ here. If you go to NDX here, let's go to 41 days out. All right, so we got 41 days right here. And look, go around Delta 15 or so here. Around Delta 15, look at the open interest here, very low. That's why I don't trade NDX also, not too much here because look, you don't make too much money here. Your fill is going to be hard because open interest is low. On the contrary, Russell 2000 or RUT is relatively better because look, as I go down here, I'm 41 days out quarterly, as you can see here. As you go around Delta, say 15, 16 here, relatively okay. It's also not great from a liquidity perspective. Open interest is not as high as SPX, but still, you'll get some fill here. But my favorite one is really SPX, hands down, mainly because open interest is really nice. You get nice fill. There is not too much slippage. So with that background here, let's go back to SPX. All right, so with the SPX here, one of my strategy when the market is not doing too much here is go into, lowest like weekly options here, like 6 days out or 10 days out, as you can see here. And look, what I've been doing off late is, go all the way here and look, looks like I don't have my trade. It's already got filled. What I would do is really go into Delta 80 or Delta 70. Typically, Delta 70 is a good one here. So I could go here around Delta 70. Look, actually, Delta 73 is good. If there's a nice open interest here, which is 2K, and even Delta here, also 4150. There is nice one here, and 4140 or 4145. There's a nice open interest. So you could take any of these things here. Let's go to Delta 78 here. So when the market is not moving too much, what you could do is really you could really buy a vertical call spread here. Look, if you do this, you're paying $375 here. It's a $5 wide spread, as you can see here. And if you take this to analyze tab here, let's take this to analyze tab and go all the way here. And look, this is the 26th of May. It's expiring next week, as you can see here. Let's go back and say, I think we're good here. Let's 26th of May. Let's go back and change the date to 27th here. 27th of May. All right. So I think the slices are already set to break even here. There you go. Look, this is the trade. You're buying a call spread, as you can see here. And look at the chance of making money or breaking even 67%, as you can see here. So that's why this is one of my favorite strategy when the volatility is low. Especially SPX is super liquid. You could basically sell a vertical call spread here. You're basically telling, hey, you know what, I have confidence that SPX is not going to go below my short strike here, 4150, and you are selling this here. And because of that, look, you have a nice chance of profit as long as SPX stays above this level here, 4149. You'll make some money here. And if I go back here and confirm and send this here, look, you're basically upfront. You're paying. Upfront. You're paying. Let's see here. Break-even price. Right now, I can do this for free because I got a lot of other things going on here. you're paying $375 right now, and your max profit is $125. So you'll make this money as long as SPX stays above 4148. Right now it's 4191 here. You would make some money here. This is one of the ways you could do some short-term trade here. When the market drops next week here, you could go even further, and you could sell these type of trade. Very good way to make some money in the market, especially in the SPX here, by selling call options. Look, what we're doing is we are selling the call option at 4145. As 4145 we are buying, and 4150 right here, 4150 we are selling. So we are basically betting stock market will stay above our short strike, and that's why you're making some good money, $125. It's just 1 week of exposure here, not too much exposure. One of my favorite way to make some money in the low volatility environment, especially with the SPX. All right, so next favorite strategy is really around broken wing butterfly. One of my favorite strategies for broken wing butterfly. I would typically go a little, say 26 days out is good enough. I would go right here. I would look at delta, keep watching the delta. So you could go into, look, we got delta coming up, all this nice and high delta. Look at nice open interest here. Look, we got open interest, very good open interest right here, 4,000. Yeah, this could be a good one here. You could go in here and sell a broken wing butterfly. So you could say buy. When it comes to butterflies, you always start with the buy here for butterflies. You could say buy and go to butterfly here. You're basically doing a broken wing butterfly right now. You're selling two at 4,000. Again, on this one here, I would wait for market to drop before I do this. Right now, volatility is low. Next week, volatility is going to go high. So you could even, look at, a different strike. But this strike is pretty good here, mainly because at 4,000, as you can see here, there's a nice and high open interest, 150K. That's a good open interest. Looks like market maker is going to make sure stock stays above this level here. So that's why you can have this as your short strike. And on the upper side here, you got 405. I would just increase it one more here. I would say 4010, $10 wide spread. And when you're buying back on the put side of the house, instead of 3995 here, I would do $20 wide here. So you can go to 3980. So look, this is your broken wing butterfly here, and you are getting 95 cents of credit here, and it's expiring in 26 days out. So right now we're getting low credit, $95 credit, mainly because volatility is low right now. If you sell next week, you'll get even higher. So you could do something like this here. I could take this to analyze tab here. Let's go to analyze tab. All right, so as you take this to analyze here, let's go and remove this here, and we got our butterfly. Nothing else is selected. That's good. We got our butterfly, and we could go back here and make sure slice is set to break even here, and our expiration for this butterfly is 16th of June. And I could come here and change this to 17th of June here. There we go. Look, chance of making money on this trade, 85%. Great. So that's one of the reasons I love this. And if I go back here, look, maximum profit is right here. You're making a nice profit here, which is $969. And your break even is right here. As long as stock stays above 3989, you'll make some money. So the reason I love this is really look as the market stock, as long as it stays above this, you'll make some money. But if the stock comes to this level here, you'll even make more money. That's why I love broken wing butterflies. Especially I love to sell broken wing put butterflies when the market is tanking. Look at the big levels here. Look at the nice and high open interest. stay around delta 17 to delta 20 or delta 15 to 20 and look for a nice and high open interest level. We call it a wall because it's like a wall, and market maker likes to protect these big and high open interest levels. And if you confirm and send this year, look, we are max profit. Look at the max profit here. Unlike selling just a put spread here, with this the max profit can go higher. It's 1095. Your max loss is 905. You're basically doubling your money with this strategy. If it stays at the short strike at 4000, you'll make some good money here. And that's why I love this strategy, which is the broken wing put butterfly. Especially I do it on SPX because you don't need to worry about assignment risk. SPX is a cash settle index. You don't need to worry about early assignments in case of SPX. Nobody is going to assign the SPX to you. It's a European style, not American style. European style means there is no early assignment. That's why I love this. You could do this. Look, right now we did this for 16th of June. You could do the same thing. I like to do this for a little bit higher time frame also. You could do the same thing for 41 days out. You'll get even more money here. So if I go back here 41 days out, let's go to 30th of June. There you go. If you go to 30th of June, let's go here. Follow same methodology here. You could look at this big put wall here. Look at the high open interest. Let's go around delta 15 to 20 here. Keep going down. Look, we are at delta 9 still. Keep going down. All right. So look, we got open interest levels here. Look, we got 3950. Pretty good open interest. 6572. That's good enough. And at delta 70, look here. This is a great one here. This level here, which is same level, 21,000. This is a great level. You could have your short strike here at 4,000, just like we have it here. And let's do one thing. Let's construct this again to get a better pricing here. You can go right here. Look at this nice and high level here. You could go here 41 days out, and you could buy. In case of butterflies, always look at buying when you're short. When you want to make some money here, and you could say butterfly, buy butterfly, and 2 at 4,000, and you could do bump it up by 5 more here, 4010, and that's a $10 wide spread here. And on the lower side here, instead of 3995 here, you could say 3980. Look, in this one here, we are we are getting a 75 cents credit here, and you could analyze this trade also here. Look, let's go back to analyze trade. And let's deselect this one here and go to expiration date. In this one is let's see here, July 1st. Let's change this to July 1st. All right, July 1st, and let's quickly change this to set slice to break even. And there you go. Look at the chance of profitability here, 81%. And this is a great strategy. Nice and high chance of making money here, 81%. I like it. And you could go and confirm and send this one here. If you confirm and send this, look at the profitability. Your buying power reduction is 926, and your max profit is 1075. Great strategy. And sometimes what I do is really I like to play both sides here. For example, what I will do is I will change this to blast all here. Let's see here, butterfly. Instead of single order, I will say blast all here. And I want to, many times I sell butterfly on both sides here. Now we are doing a butterfly on the call side by looking at high open interest. At the same time, you could go all the way down here on the call side here and look at selling a call butterfly also here. Look at the call side. You want to go around delta 10 on the call side. I always I'm always little careful because the market can go up nicely. That's why you want to stay around delta 10 on the call side here. Don't try to be a hero and go to delta 17 or something along those lines. Very risky. Go around delta 10 and look for nice open interest here. There is not too much. Even delta 8 is okay here. Look, 627. Even this one here, look, there is a nice 966 here. I would sell a butterfly right here. Let's go here and say buy and say butterfly here. All right, so look, we are selling two call at right here 4225, and you want to make sure stock price does not go above 4225. That's the thought process. Which if it just stays at 4225, you'll make a lot of money. That's your max profit level here, and buying back here instead of 4220 here. So here is where we'll reduce it slightly more on the higher side. Instead of 4330, let's say 4335, so $10 wide spread. On the lower side, instead of 4220 here, let's make it a $20 wide, again broken wing call butterfly here. Instead of 4220, we will say 4405 here. So 4405 right here, that makes it a $20 wide. You're, looks like you're getting debit here. That's not what we want to do here. 4435 and 4405. Actually, let's do one thing here. On the call side, let's go all the way up here, and 4335, that's a $5 wide spread. Let's even go bump it up here, 4345 here. There you go. And on the puts on the upper side here, 4225. Let's make sure we are 10 lower here. Let's go to 4415 here. All right, that's good enough. Look, we're getting a 60 cents credit, not too bad. So you could do one thing, you could go and analyze this trade here. Let's go back here, analyze the trade. I will go all the way down here. We got two butterflies, as you can see here. We got a call butterfly, put butterfly here. Let's see here, and we got a call butterfly. That's good enough. Let's go and do set slices to break even 7-1, and again 7-1. And what's going on right now is because we got two butterflies here, and we got to make sure our chart is a little bit crunched up so we can see both properly. Well, move something like this here. All right, let's 40. So we got two here, three, four. Our short strike here 4,000, and again here 4,000. We got two put spreads here. I don't want a two put spread. I want a put spread and a call spread here. Let's do one thing. Looks like my call spread did not come here. Let's do one thing. Let's remove this here and try once again. Delete the simulated trades. Go back to the trade tab here, and oh, actually, what I know what happened. So let's add both of these things here. Let's go analyze this trade here. So we got our put spread, and let's go back here again and analyze the call spread, which is right here, the call spread. And let's just go here and let's see here. All right, let's analyze this also here. So we got two things going on here. We want to analyze both these butterflies here. So we got say put butterfly and a call butterfly. Okay, this is what I wanted to see. And let's now crunch it up slightly. We'll click on this here and say quick scale. All right, so 4.4. We got to still go here at 4.4. Let's bring it all the way down here so you can see both sides. All right, it's a very wide as you can see. There you go. I think we are getting somewhere. Let's see, and make it a bit crunched up here. All right. All right. Now we got our butterfly. I'll make it a little easy to see here. Look, what we're saying is that we are bracketing this SPX here. As long as SPX stays between these two levels here, which is right here at 3986, and on the higher side, if it stays at below 4437, we are going to make money. And look, the chance of profitability is 81%. Now, this is somewhat like iron condor to some extent, but with a kicker. If for some reason, stock stays at these levels here, you'll make even more money, as you can see here. That's your max profit. But otherwise, if the stock stays within these levels here, this is your break even on the lower side. This is break even on the higher side. If it stays between these two, you will get to keep your credit, which is $75 on the put side here and $60 on the call side. So that's a good way to make some money. It's multiple legs. But with the SPX, you don't need to worry about option assignment because it's a cash settle, and also with the SPX you get some nice and high tax benefit. It's a 60% long-term taxation. That's a great strategy. It's a 60% long-term and 40% short-term tax gain, so it's a great tax strategy also. You could do this for SPX all day long, and many times I also go a little more aggressive on this, mainly because look, if you go a little bit aggressive on delta 20, you'll get some more money. And also look, because mainly because you got some hump on both sides here. Sometimes you get lucky here if the stock stays comes here and stays there, or comes here and stays here, you will make some good money, more than the credit received. That's why I like this strategy also. All right, so before we go further, there is a question from one of our um, uh, subscriber on how do we roll. Look, right now I got multiple things going on. I will take you to my one of my smaller accounts here. This in this smaller account here, what I'm doing is I want to, this is around 30K account here. I want to make this to be say 100K pretty soon. And as you can see, I got my iron condors here, and I got my iron condors. I have got $122 theta decay every day in these iron condors. I have a passive income of $122. And I also do butterflies. Look, just like we talked about, I did some butterflies here. Theta decay is $24 on a daily basis. I got SPX and Russell butterflies. And I got vertical here. Look, in these verticals, I got $37.61 theta decay. All in total, we got 122, say around 150, and say 150 plus 30, around $180 on a daily. All right, thank you so much here. As usual, look, next week is going to be very crazy week, mainly because debt ceiling is still lingering. So stay very focused when the market drops next week and the volatility goes higher. Basically start selling some premium for next week. You could basically start selling some call put spreads underneath here and make some good money here. So when you're selling the put spread here, typically I recommend you to go to $10 wide spread here versus $10 wide or even $20 wide, because that's where you can make some good money here. Even though buying power reduction is slightly higher, it's a little bit difficult to make too much money with the $5 wide spread. That's why I recommend you to go into even 10 or 20 or even $25 wide spread. Look for those high open interest levels, and basically have your short strike in the high open interest level. So with that, thank you very much. Happy investing and trading. Please subscribe.